Happy Money Monday. Happy International Women's Day.
Yep. Thanks to all our female listeners. We appreciate it. Today we're going to cover a few pretty high level things, and our one big thing is going to be Brent crude oil. But just to start off,
So I'm going to give you just an overview of what's going on with interest rates and how they're impacting the stock market and bond market and potentially even the real estate market. So right now, interest rates have been rising pretty rapidly over the past couple weeks. Today, the 10-year Treasury, which is a United States-backed bond, this is government-backed, that just reached 1.5% interest per year for a 10-year Treasury. Now, you might say to yourself, that doesn't sound like that much. However, when it's been in the sub 1%, that increase really starts to scare people. The reason why interest rates increasing scares investors is because realistically, at the end of the day, these are riskless assets, because when you buy a government bond, you totally expect to get that return back. So if you can get a higher return in government bonds, it takes away the incentive of investing in stocks. On the flip side, when interest rates are low, all of a sudden you got nowhere to go with your money but stocks. But since interest rates are rising, again, 10-year interest rates hit 1.5% today, that will take risky investors and move them into more riskless investments. It'll also increase the rate of return that is required for investors today, which means that they want to get into companies that are generating a profit today. They don't want to wait for companies that are 2, 3, 4 years down the road. So by interest rates increasing, people are really getting away from the tech stocks, from these growth stocks, the stocks that have promise later on, in order to get a return right now, today. So you see the Nasdaq just officially entered a correction territory. It's 10.5% off its all-time high. Notably, some big names: Tesla's down 33%, Apple's down 15%, Netflix is down 12%, and Amazon's down 10%. So these are massive American companies, tech companies, that have really gotten pulled back and down into correction territory. Maybe time to buy that dip. However, if rates continue to rise, maybe investments in these companies won't be as favorable as they were since rates were lowered. In addition to it affecting stocks, also affects the real estate market. So the average 30-year mortgage rate just increased above 3% for the first time in a while. And what that tells you is that it's going to be more expensive to borrow. Your rate that you're borrowing is going to be higher. Maybe it'll affect the amount of buyers that are searching for houses right now. However, inventories are super low. I know in Phoenix we have less than 4,000 homes on the market, and the average healthy market should be about 15,000 to 20,000. So we have really low inventory. It's pushing prices up. Obviously, with these low rates historically, people are wanting to buy houses, but as these rates increase, it will drive people away from buying houses, away from buying future growth stocks. It'll get them into buying bonds and buying value stocks, which, as you can see, you're seeing a rotation from tech stocks into value stocks, financial stocks, the more, concrete money makers today. Outside from the stock market and real estate market, the cryptocurrency market is doing great. Bitcoin just eclipsed 52,000 today. Ethereum's at 1,800. So as we continue to see them rise away from their dip 2 weeks ago. So anyway, that's just kind of a general overview on the markets right now. And Diego, let's get into crude oil.
So a lot of things are going on in the market. It seems like a pretty volatile time. One kind of sleeper that a lot of people haven't really touched on is Brent crude oil prices. And Brent crude oil prices right now, mainly referring to the futures contracts, they're up 32% right now, year to date, roughly around about $68 a contract. And what that tells you is just there's a lot of focus right now on gas and oil. And even though there's been a big sentiment with electric vehicles and big auto manufacturers teaming up with these startups that are basically just getting the electric vehicle market going, you'd think Brent crude oil prices were kind of irrelevant, but there's probably a few different reasons why Brent crude oil is up right now. The first one is Texas just freezing over right now. Texas is probably the U.S.'s largest oil exporter.
Definitely.
And when it froze over, I think it was roughly 30% of their system shut down with crude oil, so they couldn't get it out. Another reason is Saudi Arabia just got attacked and in one of their largest storage facilities, but they basically shrugged that off. They said it wasn't too much of an effect. In addition, all the planes that were grounded, all the boats that were docked, because of the pandemic, are starting to restart again. People are starting to fly. people are starting to get into cruise ships. So what does it take to basically make those run? A lot of oil.
A lot of what you're talking about right now is supply and demand and how those dynamics. We're seeing less supply because of Texas, less supply because of Saudi Arabia, maybe some oil cuts in OPEC, and then all of a sudden you're seeing increased demand with increased travel, increased oil consumption, increased activity. So, and the futures being at $68 a barrel because the futures price is higher than what it is currently today. That tells you that the market anticipates the demand for oil and the price of oil to increase even more. So
if you want to get involved in oil and you don't want to buy a barrels contract, look into ExxonMobil, look into gas companies like that. Let's not forget, no joke, the price of crude oil last year was actually negative at one point. It actually costs more to have to hold it and store it than to even sell it. So that's pretty crazy. It's on a whole turnaround.
But with oil prices increasing, you'll see ExxonMobil's stock price skyrocket with the increasing oil prices. And at the end of the day, that's because that's what they sell. That's their commodity. If they're selling oil for $50 a barrel, their expenses are the same as if they were able to sell oil for $60 a barrel. So they're just getting $10 profit extra. That's not, that increase in revenue is increased profit at the end of the day. So that's why oil companies are a good way to get exposed to the oil price fluctuations. Now, long term, I don't see oil going up tremendously more. I mean, I don't know what it can reach, but I just see the demand for oil in the long run lessening because you're seeing a push in the electric market. I think the electric batteries are getting better. I think it's just more efficient and less kind of CO2 consumption for the world. But for at least the short term and for the next, decade or so, oil's still gonna be important. So I don't know.
It's gonna take probably a minute until we make that full shift over.
Yeah, 100%.
But we'll see. And then just to wrap it up, guys, Joe Biden's expected to meet with the Quad. It's gonna be the first ever meeting between Australia, Japan, India, and the United States. And they're mainly doing that just because they want to put a little pressure onto China and just the certain tactics that they've been kind of up to the past few years with cyber attacks and whatnot. Not taking a stance, but they're meeting and, should be interesting.
Happy Money Monday, guys. We got The Bachelor tonight. I know.
Fantasy Suites, baby. It'll be all right.
Happy Monday Monday, guys. Have a great rest of the week.
Woo!